Yeah, hello and welcome to another update video about Bitcoin. Yeah, Bitcoin hasn't really moved much today. Overall, the crypto market saw a little bit of selling pressure, but as I already said in the first video earlier today, it's likely going to be a quiet Saturday. Maybe we'll see a little bit of action tomorrow. Overall, not much happened over the last few days, just a little bit of volatility, but the overall scenario is unchanged. The narrative has been unchanged for many, many weeks. The narrative is we are in a correction. Maybe it's finished, but if it's finished, then the price needs to, well, stabilize in the current micro support area, which is between 61,208 and 64,280. And then, yeah, the bulls, if the bulls turn up from here, that's still, they could still sort of, let's say, save the yellow count. But if you watched the videos over the last few days, then you know that there is also the white scenario, which needs to and needed to be considered, which suggests that another extension in this wave 4 is possible in a larger WXY structure. We've been talking about this one for many weeks as well. And to make this, let's say, scenario more likely, the price needed to break below this swing low here, which was the Thursday low. So because the break occurred, this white scenario has gained more likelihood. Doesn't mean though that this has to play out, of course. The bulls could still turn up, but it's made it more difficult for them. And the next level that needs to break to the downside to basically confirm the white count further is 61,208. So 78.6 retracement. And then here the swing low that was formed on the 19th of April. And then, yeah, that's sort of how the white count would unfold. Basically, both counts need to be considered. Someone asked me how to trade this, actually, if both, the price could do both. Well, the price can always do both. The price can always go up or down. I think it's I talk about that so often. It's all about scaling in, right? You don't want to trade the wave count. I think that's very clear, and I always try to make that clear. Trading the count isn't really what you normally want to do. You want to trade the levels, okay? That's very, very important. I actually did post that earlier today on Twitter, X Network. Feel free to follow us here. There's lots of stuff about mindset and trading tips here and there. But what I did post was that levels help us determine risk to reward ratios and validate or invalidate counts. That's why it is best to focus on trading levels that we receive through the counts rather than the counts themselves. While we need counts to establish levels, so we use the counts only to get the levels, right? We should trade based, we should trade based on the levels themselves, choosing either to counter the trend suggested by the count or to trade along with it. So it's all a question about reward to risk. So you don't need to trade the primary count, for example. Yeah, you don't trade the primary count all the time. You trade the primary count when the reward to risk ratio is favorable for the primary count. You trade the alternative count if the reward to risk ratio is favorable for the alternative count. It's actually very simple. But yeah, looking at the microstructure here, obviously for Bitcoin, we're currently holding above the main support area. This is the main assumption for this overall scenario, yeah, that we are in a wave 4 correction, and the levels haven't changed in many, 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 many weeks. I mean, from the beginning when we entered this support or this correction on the 14th of March, these levels here haven't shifted, and they are obviously more reliable than any kind of micro levels that I give you based on microstructures, because they are unreliable. The micro patterns are obviously within a correction unreliable. They change all the time. I talk about that very often, but still we track them because, first of all, some people like to do scalping. But if you're really interested in trading for the fifth wave to the upside, which would take us to 90K, you need to base your position size on this level, 50,725, unless you have a different edge, but that's the key level, and that hasn't changed. So the way to do this from an Elliott Wave point of view, and there will be hundreds of strategies, but that's sort of one way that would work for most people, in my opinion. And it's always like that. So whenever the price comes down, you can start to add positions. And we've had a few occasions where the price dipped into that support region, right? Add positions, maybe only a small position here, maybe here a little bit larger. We dipped into that support area again. We're now again trying to dip into that support area. You don't even need to wait buying until the price dips into the area. You can buy a little bit above that, but the main takeaway here is to calculate position size based on the 50% fib level, because below that level the assumption changes. Okay, and then you can just buy, accumulate, and when the price rallies, you sell, sell, sell. That's sort of how to do this. The levels are clear on the chart, and then selling in resistance. The size of the triangle represents the position size. Okay, and I mean that's sort of what I always talk about. You don't trade the levels, you don't trade the counts, you trade the levels. Okay, buying here, selling here, buying here, selling here, but you don't sell everything because the price could take off to 90k, right? But that's what you have your core position for. But if you want to trade the fourth wave, that's the way to do it in the most intelligent way, in my opinion, without losing money, because most people lose money in corrections because they are too greedy. But this is the way to do it. You have a range. It's defined between the breakout point, which is the third wave high, maybe even a bit higher. It doesn't need to be perfect, okay? Overcome the desire for perfectionism, but then accumulating as the price gets close to the main support area or even dips into this. And so people shouldn't actually lose much money at all, because you calculate your position size based on that level. And I mean, we haven't even, looking at Bitcoin, we haven't even dipped deep into the support region, okay? So everything is absolutely okay. And that's the way to do it, okay? Unless you really want to trade within the correction, which for most people is a recipe to lose money. Elliott Wave helps us to understand the main levels, but also helps us to understand that we're in a correction. And in a correction, most people lose money. That's why I often say zoom out, okay? But we still do the work to analyze the patterns. That doesn't mean that the micro patterns give you any trades really, okay? Not necessarily. I mean, this is all corrective mess. I mean, yeah, maybe a 5-wave move up, okay? But I don't see, I mean, maybe, that we had a 5-wave move up, we had a possible pullback, there was a reaction, okay? So this is a possible small 1-2 setup. But the problem is, what I mentioned to you, is that we broke below this low. So it's it shouldn't really have done that, ideally not. Now that it broke that low, it increases likelihood for the white count. So again, it's all about zooming out. We're still not clearly out of this correction, accumulating, and you would capture this small setup anyway if you trade the larger box. I mean, that's the way to do it, unless you have your own edge, you have your own trading system. Elliott Wave is no trading system, right? Remember that. Elliott Wave helps us to understand the patterns, helps us to understand the structure, the relevant support levels, resistance levels, helps us to understand the levels we can calculate position size against, and so on, but it's not a trading system as such. So you can always integrate your own moving averages, all sorts of stuff. But yeah, overall situation hasn't changed. So what we're looking for now is confirmation that the white count is unfolding further. And I already gave you the levels for that need to break for that to the downside. And then would be targeting probably around the 57k level, 58k maybe. But if we break above the Thursday high, which is around 65,350, that would then again reactivate the yellow count. Okay, at the moment, clearly there is no impulse to the upside, and there was a small impulse here on the smallest time frame. Okay, there was one, but that wasn't validated. So there is no valid impulse to the upside at the moment, and until it's impulsing or giving us an impulse to the upside, we are basically still in a correction. All right, so we're still in a correction, and it will be clearer once we get an impulse. Until then, I think this is just range trading, okay? So that's sort of what I wanted to answer also in terms of like a question, because the price hasn't changed. So hopefully that helps one or two people. We have hours of live stream tutorials about this in our membership. So if you remember, you have lots of stuff to read and watch, and yeah, plenty of content about how to do this, scaling in, scaling out. And you can't really trade this aggressively until we have confirmation that the low has formed, okay, in this correction. And yeah, this is sort of how this would be approached, in my opinion. Corrections are always draining, boring, and so on. You know that. It's wave fours are there to frustrate people, absolutely. And when enough people are frustrated, the chart typically starts to move. Could we be back in the bear market? Yes, someone asked me. Of course we could be. Of course we could be. I can't guarantee that we go to 100K from here. Yeah, we don't know what's happening, of course not, but we have levels to watch, and we know that below 50K, the prospects that we're still in the bull market reduce drastically. That's why this level needs to be used to calculate position size. Okay, nobody's trying to predict the future. Okay, to a degree, yes. Okay, but overall, this is a risk management tool and risk management exercise. And I know there are people already calling for 12K, the same people who've been calling for 12K when the price was at 30K. They're the same people who were calling for 12K when the price got to 40K. At some point, they will be right. But Elliott Wave isn't necessarily trying to call markets. It gives you probable reversal points and so on. But most of the time, it does a great job in acting as a risk management tool. And then you can just use the levels to trade, calculate your position size, and then just, if you like range trading, that's for you. If not, just use the zone to scale in if you want to trade that setup. And then when the fifth wave starts, then you can take profits. Whereas if we break below that level there, the lower support boundary line, then we know that something different is going to unfold. And that's a huge benefit of the analysis, because it tells us when things start to break. That's golden knowledge, okay? That's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.